What if I told you there's an ETF that's been beating the market in ways that might surprise you? It's not your average fund, but one that's got investors talking. Today we're going to uncover the secrets behind this small cap powerhouse and 3 others that could change how you invest. In this video, we're looking at 4 ETF combinations that might really boost your wealth. Whether you like taking risks or prefer playing it safe, we've got ideas that could work for you. Curious about how these small cap ETFs could give your investments a big lift? Let's jump in and see why smart investors are paying attention to these lesser-known funds. Meet Alex, a 28-year-old marketing specialist feeling the money squeeze. With $30,000 in student loans and a $50,000 salary, Alex wonders if there's more to life than just scraping by. Each month, most of their paycheck vanishes into rent, bills, and loan payments, making wealth building seem like a far-off dream. One night, while browsing financial news, Alex finds an article about small-cap ETFs. The growth potential catches their eye, but the flood of options and jargon is overwhelming. It's like trying to read a foreign language. How do you pick from hundreds of ETFs? What sets them apart? Alex realizes this confusion kept many of their friends from investing. Instead of letting fear hold them back, they decide to make a change. They start small, spending an hour each evening learning about ETFs, market trends, and investing basics. As Alex keeps at it, something clicks. The world of ETFs begins to make sense. They start to see how these investments could open up financial opportunities beyond their regular paycheck. Building a portfolio that might outperform their day job starts to feel possible. Feeling more confident, Alex decides to create a smart ETF portfolio. They're aiming for a balanced mix of growth potential and manageable risk. It's about more than money. It's about taking charge of their financial future and breaking free from living paycheck to paycheck like so many other young professionals. Let's look at the small cap ETFs that grabbed Alex's attention and could shake up their finances. Did you know there's an ETF that tracks over 1,700 small US companies? It's called the Schwab US Small Cap ETF, or SCHA for short. Alex saw it as the perfect starting point for their investment plan. Alex was impressed to find that SCHA had been growing by about 7.78% each year over the last 10 years. That's much more than their yearly pay raises. This kind of growth is why small cap investing can be so attractive. SCHA lets you invest in a wide range of companies across different industries. With 1,728 holdings, it's like owning a piece of tomorrow's big companies before they make it big. And the best part? SCHA does this at a great price. Its low fee of 0.04% means more of your money stays invested and working for you. One big advantage of SCHA is how spread out your investment is. By putting your money into hundreds of companies, you're not risking it all on just 1 or 2. This can help protect your investment while still giving you a chance to grow your money. SCHA invests in growing companies like MicroStrategy and Wingstop. They're not famous yet, but they could be someday. As these companies grow, your investment could grow too. Alex decided to make SCHA the main part of their investment plan. They liked how it offered both growth potential and variety. With SCHA as a base, Alex felt good about building a profile that could grow faster than their salary over time. But Alex didn't stop there. They had their eye on another ETF that could take their investments global. Want to see how Alex expanded their strategy to include international opportunities? What if you can invest in the next big thing before it becomes big? That's exactly what caught Alex's eye when they discovered the iShares MSCI Emerging Markets Small Cap ETF, or EEM for short. After building a solid foundation with SCHA, Alex was ready to take their portfolio global. Alex realized that sticking to just one country might mean missing out on great opportunities elsewhere. But investing internationally, especially in emerging markets, comes with risks. These markets can be unpredictable, with political and economic issues you don't see as much in developed countries. It's like a roller coaster ride, exciting, but not for everyone. So why did Alex decide to go for it? The potential rewards were just too good to pass up. Emerging markets are expected to grow a lot as they develop. Countries like Taiwan, Brazil, India, and Mexico look really promising. EEM focuses on small companies in these developing economies, which could lead to even bigger returns. In the past, small stocks in these countries have often done better than larger ones. Alex liked how EEM spread investments across different sectors. It puts money in industries like manufacturing, tech, and materials, all important for growing economies. Alex was also impressed by the variety of companies in EEM, from new startups to more established businesses. Experts say that including emerging markets in your investments can boost returns and spread out risk. These markets often grow faster than developed ones, which is great for investors looking to make more money. By adding EEM to their portfolio, Alex hoped to give their investments a growth boost that could outpace their salary increases. It was an exciting move that opened up lots of possibilities. Alex's strategy was coming together, mixing steady U.S. small caps with the growth potential of emerging markets. But they weren't done yet. Alex had another ETF in mind to further diversify their portfolio. Imagine an ETF that beat 93% of its peers. That's what the Pacer U.S. Small Cap Cash Cows 100 ETF, or CALF, has done. This hidden gem caught Alex's eye for good reason. CALF stands out because it focuses on free cash flow yield. Most ETFs are weighted by market cap, but CALF looks at free cash flow instead. That's the money a company has left after paying for operations and investments. It's like extra cash that lets a company grow, pay dividends, or buy back shares. CALF picks small cap companies that make more cash than they need for everyday business. This strategy is working well. Companies with lots of free cash flow can often handle tough times better, invest in growth, and keep shareholders happy. It's like having a financial cushion when things get rough. The ETF holds less famous companies like CVR Energy, Andersons Inc., and American Eagle. These aren't big names, but they have strong finances and room to grow. CALF spreads its money across different sectors, especially consumer goods, industrials, energy, and tech. This mix helps balance risk while tapping into various parts of the economy. Alex liked CALF because it could keep performing well. The ETF's focus on financially healthy companies gives it a strong base, plus its 0.59% expense ratio is pretty good for a specialized small-cap ETF. CALF became a key part of Alex's portfolio. It fit nicely with SCHA's broad market exposure and EEM's international reach. With CALF added, Alex felt their strategy had a good mix of stability, global coverage, and potential for high returns. Alex now had 3 solid ETFs as the core of their portfolio. They were close to a perfect mix, but one more ETF would round things out. Want to see what Alex picked to complete their portfolio? What's helped the Vanguard Small Cap Value ETF, VBR, beat the market for over a decade? Turns out, slow and steady can win the race. As Alex built their profile, they found VBR was great for adding stability and value. VBR focuses on value investing in small caps. Think of it like buying a $100 bill for $80. VBR looks for small, undervalued companies with strong fundamentals, good finances, smart management, and room to grow that the market hasn't fully appreciated yet. The results speak for themselves. VBR has averaged nearly 9% annual returns over the past 10 years, making it a top small-cap ETF performer. Its low price-to-earnings ratio of 13.7 suggests the companies it holds are still undervalued. VBR's top holdings include Builder FirstSource, Booz Allen Hamilton, and Reliance Steel and Aluminum. These aren't household names, but they're set for growth. The ETF focuses on industrial, financial, and consumer discretionary sectors, giving you a slice of different parts of the economy. Experts think value investing in small caps can lead to big gains over time. These companies often have the basics in place to grow. Plus, VBR pays about 2% in dividends, which is nice for long-term investors. Adding VBR to their mix gave Alex the balance they wanted. It steadied things out while still offering room for growth. It was like adding a dependable friend to their investment group. With VBR, Alex's small-cap ETF portfolio was done. They had a mix of broad market exposure, international opportunities, cash-rich companies, and hidden gems. It was built for growing wealth over time. Now that Alex had their perfect mix, it was time to put it to work. But how would this carefully built portfolio do in real life? Let's see. Ready to see how Alex's ETF strategy stacks up against a typical salary? Let's break down this portfolio and see how it could boost wealth growth. Alex picked 4 powerful ETFs: Schwab US Small Cap, SCHA, iShares MSCI Emerging Markets Small Cap, EEM, Pacer US Small Cap Cash Cows 100, CALF, and Vanguard Small Cap Value, VBR. Together, these give Alex broad exposure, international diversity, and a focus on strong financials and undervalued companies. Here's where it gets interesting. While salaries usually grow about 3% a year, this ETF portfolio could do much better. Let's look at an example. Say Alex starts with $10,000 and adds $100 every month. If the portfolio grows 10% a year, which is reasonable for small cap stocks, after 20 years, it could be worth $67,275. That's compound growth at work. To make the most of this strategy, Alex needs to be consistent and rebalance regularly. Once a year, Alex should review the portfolio and adjust it. This means selling some of the winners and buying more of the losers to keep the right mix. It's like giving your car a tune-up to keep it running smoothly. As Alex's portfolio grows, so does the excitement. This mix of ETFs could do better than regular income sources, especially since small cap stocks often beat large cap stocks over time. But for Alex, this was about more than just money. The real change was just starting. Alex's journey into ETF investing changed more than just bank account numbers. The early feelings of being overwhelmed faded, replaced by confidence and a real grasp of how money works. As Alex learned, jargon like expense ratio and diversification became useful tools for building a better future. The change was big. Money worries melted away, and Alex felt a new sense of calm and direction. Looking at investments and planning ahead became exciting, not stressful. This new financial stability made other parts of life better too. Alex felt more sure at work, especially during negotiations and career planning. Friends and family started coming to Alex for money advice. With a good investment plan in place, Alex started seeing new opportunities. Early retirement wasn't just a fantasy anymore, it became a real goal. The idea of changing careers or starting new projects without worrying about money opened up exciting possibilities. Alex began thinking about big dreams that once seemed impossible, like traveling for months or starting a business. Excited by this personal growth, Alex started helping others learn about investing. Setting up casual investment groups and giving advice to curious friends became a rewarding way to share knowledge. Alex's future plans grew too, including the idea of retiring around 50 to work on passion projects. One big dream was starting a nonprofit to teach money skills in communities that needed it most. Alex's story isn't special. Anyone who wants to learn and take action can do this too. So are you ready to start your own journey with ETF investing? Think about how your life could change as you take control of your money. Did you know that small cap ETFs can be a powerful tool for building wealth beyond your day job? Alex's journey proves it. Let's talk about how you can start investing today. You don't need a ton of money to begin. Even small, regular investments can add up over time. With ETFs like the Vanguard Small Cap Value ETF, VBR, you can start with just one share. Keep in mind what the experts say. Small cap stocks have often done better than large cap stocks, but they're riskier. That's why it's smart to spread your money around. Think about investing in different ETFs to lower your risk. Here's how to get started. 1. Look into small cap ETFs and how they've done. 2. Set a realistic goal for your investments. 3. Start small with regular investments. 4. Keep an eye on your investments and make changes when needed. Think about where you could be in 5, 10, or 20 years if you start now. Building wealth isn't always easy, but with a good plan and sticking to it, you could really change your financial future. Ready to take that first step?